Good morning, traders. Today is Friday, November 18th. My name is Charles, and this is the Pirate Traders live stream. We like to talk about the NQ and the ES and how they move in terms of a two-way auction process. Speaking of which, where are we at in the auction process now? Well, I would describe myself at this moment as bullish. The reason being two basic things. One, we've got a gap up. Now, of course, that means the first order of business is for the market to try to fill that gap. So even though I'm bullish, I'm certainly not long, right? You don't want to get long when you have a gap like this because the first order of business is to fill that gap. But wherever they find support, it is buyable as what is called a gap and go scenario. And that is what I'm looking, excuse me. That is what I'm looking for this morning, okay? The reason for that is we had this major move of excess to the upside, okay? Big move of excess to the upside. There's two ways you can balance off excess. You can either go sideways at higher prices, or you can pull back down with price and repair it that way. So you can use time or you can use price. Now, until you break lower, you don't know what it's going to be. If a market gets a big move of excess and it starts to consolidate sideways, you don't know if just consolidating sideways will be enough for it to break higher, or if it will still need to pull back with price in order to bring in the support for a bounce, right? But once you try, if you fail, guess what? You've got some information. And that's what we got yesterday, right? That sideways balance broke lower, but then they found support, and then they pulled, of course, in the overnight, they pulled back up into that balance. So I am now looking at this area where we've been trading all week as what we call a balance area, okay? And a balance area, it works a certain way. The market tends to move straight from one end of balance to the other, and then straight back up again. So with that narrative in mind, with the fact that we looked for that pullback and we didn't need it, we popped back up into the balance area, with the fact that a balance area increases the odds that we're going to rotate towards the opposite end of balance, and the gap up, all three of those things in conjunction make me feel like the market is bullish today. So I am just looking to see where the buyers step in, where they create that support so that I can join the party. The way I will be wrong, the bullish scenario for today would be the bearish scenario for today would be if we did not find support at yesterday's high. And really, to be a little more conservative, I would even say this node right here where we spent all this time and brought in all this volume in the overnight. If this breaks here, I'd be looking for the market to go lower. Anything above that, I'm looking for some support for the market to push higher. Okay. And oftentimes balance areas can be extremely tricky in the way that they move. It won't go in a straight line from one end to the other. So it'll tend to be one of those days where they'll keep making you think it's going to fail and pull back. But then at the end of the day, you randomly find yourself at the opposite end. So that's how I see it. A potential for a gap and go. Right now, they are filling that gap. Where will they find support? Okay, first potential support right here with this large node on the cumulative, 39.73. Pretty much anywhere in between 73 and 67. And then, of course, yesterday's high at 39.62. John Lash says NQ gap filled. Okay, so here you go. So the NQ doesn't have as clean a balance area. It's not like a perfect rectangle like the ES's is. It's more of like a channel that was forming right here. So same as the ES, we're looking for support here at yesterday's high or in this node from the overnight just below it. So somewhere between where price currently is and like 11,709. We're looking for support in there. If they can find it, turn around and head back up into this balance area, it would be bullish for a trade to the opposite end of balance. So essentially, if they can find support and get back above the overnight high, then it gets, let me zoom in. Sorry, guys. I don't know why I always do it so zoomed out. Yeah, if they can find support in here, turn around and head back up above the overnight high, you can look for continuation to the upside, which would be bullish. Seven seven says, today's bigger players having a weekend already? Is Scooball here? I don't think anybody's having a weekend. I just think they're waiting to see where does the market find support. The only people who generally trade a gap are those looking for a gap fill. Big players aren't going to go long up here at the highs. They're going to wait for that pullback. Unless, of course, they want to go short, in which case they'd be short right now. If you have not yet, please smash that like button. Hit that like. Smash that subscribe. Gently touch that notification bell. You know you want to. Well, I think it's safe to say if this starts happening again next week, if we have these crazy, slow, grindy mornings next week, we may be looking at a new pattern here. This is like what, the third time in a row it feels like we've had a huge gap, and then the market just slowly creeps around. Like, no momentum. John Lass says you're going to have to start trading the overnight. I know. It comes in waves, man. I remember in the past being really frustrated because there were like weeks and weeks where like during the day we'd get these like tight rotational days, and then in the overnight it would make some big move, and then we get a tight rotational day, and then in the overnight it'd make a big move, and it was like it would drive me nuts. And I would start to think to myself, I got to get into overnight trading. This is ridiculous. And then it would flop, and the overnight would start balancing, and the regular trading hours would make the move, and vice versa. So I've just learned, it's markets. So sometimes they do what you want, and sometimes they don't. Sometimes they give you good opportunities, and sometimes they don't. John Lash, I wonder if there's a correlation with those times. The only correlation that you'll find is with market opens. I think like 3 a.m. is when London opens. That's like where you often get a big change. But other than that, there's no patterns. If there were patterns, everyone on Earth would be trading them. Ed seems manipulated. Do you mean the move today? No, they're just trying to fill the gap. Finding support is pretty normal. It's just very slow. Market Arthur says, what's wrong with the market? I don't know. Like I said, it might have. I was talking about this yesterday with the brigade members. It might have something to do with the options. They've just created a whole bunch of new options chains so that there's 0 days like every day. I have a feeling it has something to do with that. That like right first thing in the morning when all these mechanisms trigger, it's causing this sort of choppy, slow grind until something happens, some piece of news or whatever that breaks and creates some momentum. Seven Mile Reach, any significant news due today? Not that I'm aware of. There's some home sales numbers, but that shouldn't affect the stock market. Ed, with all the layoffs, there should be fewer 401ks. Oh, Ed. Oh, Ed, you silly, silly man. That's not. 401ks mean nothing to the market. That is such a tiny, tiny little piece. And as a matter of fact, if you wanted to look at the case for people's retirement savings, odds are that if they were gonna fear, if they were gonna have fear and they were gonna sell their stocks and their 401ks, they would have already done it by now. I hope. Michael, 401k inflows have a significant influence on certain days of the month. Well, do tell. When one of those days comes, you tell me if I should buy or sell based on the 401ks. Michael, I don't remember the days now. I read it in a technical analysis magazine. Well, if you read it in a technical analysis magazine, it must be true. Did they mention the moon signals? Just so you guys know, the overnight repo market for banks does significantly more volume than all the 401ks every single night. That shit is a drop in the bucket to the amount of money that moves through the market. I'm going to consider this low weak because it is less than 100 contracts. I have found that generally, if the market makes a low with less than 100 contracts, it needs to revisit it. But otherwise, we have good taper right at support. Ed, in a bull market, tends to be higher over the holidays. Yes, that is very real. That markets tend to pump around Christmas. People are just in a good mood. They're in good spirits. The weather outside is frightful, but the fire is so delightful. David V, is this also applicable to highs with less than 100 contracts? Yeah. It's probably the least important of all the signals. You know what I mean? But it's just something to take note of. Particularly in a situation like this where it looks like the market is making beautiful support. You know, with this taper, it looks like the market is ready to turn around and head higher. But that's that one little thing of like, but not even 100 people got to trade there. There might be someone left, you know? Michael, I am aware of the lunar cycle influence on volatility. It is a real influence. Also, cloudy versus sunny days in New York City. The former tend to be bearish and the latter bullish. Other things being equal. Yeah, I cannot agree with that at all. I live in New York City, and there've been plenty of sunny days where the market goes down, and plenty of rainy days where the market goes up. There's this thing called confirmation bias that humans have. We have these little things in our brain, and it's one of those things where if you want to believe it, if you want to believe that the moon affects the markets, you can find it. You will 100% find proof of that. Look through enough charts, look at enough data, it'll work. But it never works moving forward. So if you were to look at a piece of data about moon signals from the past, and you were to try to put that at work, say the last time there was a full moon, the market went down. So you say to yourself, okay, next time there's a full moon, I'm going to go short the market. It won't go down and you'll lose money because it's not real. If it was, everyone would be doing it, right? If trading was that easy, if all you had to do was wait for a certain day of the week or a certain season to change and then you would know what to do, everyone would just do that. Mark says, I believe the moon is made of cheese. Well, cheese can affect people too, you know? I say Gouda, bullish on Gouda, bearish on Kraft singles, okay? So it depends what you're eating that day as to whether the market goes up or down. Joa, what about the Friday after Thanksgiving? Market always go up? I'm not aware of that. Rocket says, squeeze the cheese for the win. Do you mean the cheese in a can? Good God, man. James, all I know is whatever trade I take, the market will immediately do the opposite. I know you're joking, but quick hint, start putting your entry where you would put your stop. So many traders have this mechanism in their mind where they wait too long to make a move on a signal. So right now we have a gap and go. The market is bullish. Are you long the market? Did you get long when the market was pushing into support? Probably not. So if it were to turn around now and start heading up towards, higher prices, you'd be chasing the trade right there. and then you'd be putting your stop right there. And then the market would come down and it'd stop you out, and you'd be like, every time I enter a trade. So the trick is, if you find that pattern happens to you a lot, where every time you enter the trade, you get stopped out, what the problem is you're waiting too long to get in. So you have to develop the practice of waiting for the next entry. So if you were thinking about FOMOing in up here with your stop here, instead just say, I'll put my order here with my stop down here, and maybe I miss the trade. Maybe they run away without me. You'll find you get a lot better fills that way. You will miss trades. You will miss opportunities, but when you get in, there'll be much better setups, and you'll have that happen much less often, where it feels like as soon as you get in, the market goes against you. Rocket developed a taste for Velveeta while fishing as a kid. I mean, sure. It tastes good. Rocket. It's better than worms, huh? I would try that. All right, so market creating a poor low here, increasing the odds that they're going to repair it. There they go. So this is the news bots reacting to that housing data. Thomas, support is just an area until it's proven support. We only know support and rejection after the fact, which is why confirmation matters. Yeah, but you can't wait around forever. That's the thing. You know what I mean? So you see a level, you think the market is going to find support. You don't have to have an order waiting there. So let's say you wanted to buy yesterday's high, thinking we were going to get support there for a gap and go. You don't have to have an order sitting in there waiting. But if the market pokes down into there and it finds support and it starts to come back up, you may not get another chance. You know what I mean? Like, it may just keep going. Probably more likely it grinds for a little bit and it gives you some time. But you may miss your chance. So if you're not one to have an order waiting at support and be willing to accept the risk ahead of time, you have to have lightning fast trigger finger to get in once the trade finds it. Obviously, this is not the same when the market is in like a choppy, grindy mode as when it's in a trending mode, but the best opportunities are when it's in a trending mode, when it's the hardest. But I absolutely agree. You always want to wait for the retest to truly trust it. All right, so the gap is filled. Now the question is, do buyers step in? Can we push the ticks back above the zero line? The more time that we spend inside of yesterday's range, the more bearish it becomes. So we've got a nice little node of support here. So I don't necessarily need it to be exactly at yesterday's high. We can find support in here. But if this node around 54 breaks, we're looking for further downside continuation. And ideally, again, we want to spend as little time as possible. We just want to poke in and go. That is what a gap and go would look like. Can they hold it? Thomas, I don't disagree. Risk management is key, but to assume support and resistance without confirmation of price action is to guess and hope. Yeah, no, I agree with that. I mean, pretty much everything we do is guessing and hoping and then waiting to see if we're right. I mean, that's our business model. We, of course, try to use as much data as possible to make the best decision, but it really is always just a guess. All right, so we got to yesterday's high. We got a little tiny bit of support, but not very much. Okay, so that is less bullish to see. Generally, if the market wants to gap and go, there are buyers waiting there to get in. Because they weren't able to get the ticks back above the zero line, we know that there weren't buyers waiting. There are still more sellers in the market. So like I said, I'm going to give them to 54. We got a lot of support in here. Lots of reasons for the larger players to have waited for this to get in. But if this breaks, I become bearish for continuation lower. Falcon 1, have you seen the software that shows big orders being executed in the market? Are you talking about Bookmap? Talking about this right here? Oh, 101 likes. All right. Thanks, guys. Thank you for the likes. As I've said, I'm bullish above this node for gap and go, although it's getting very close to breaking. So, trade with caution here. It is less bullish that we pulled the value area into yesterday's range. It is less bullish that we didn't immediately have support at yesterday's high. But to me, it remains bullish for all the reasons I discussed this morning. The fact that we, found support on a pullback out of a balance area. So we looked below a balance area and failed, increasing the odds that we're going to head up to the opposite end. And we had a gap up, which is a signal of momentum. And so until this support breaks, I stay on the side of the momentum. But like I said, I'm very close to changing my mind if they can't get those ticks back above the zero line. Falcon, it may be that, but it was footprint charts in a bar form. No, I don't know what you're talking about. But you can see big orders on here. You can see the volume on Bookmap. Okay, so we got the ticks back above the zero line. That's a sign of new buyers stepping in. And we worked our way back above the overnight high. So now the question is, can they hold it? Can they stay? Can they keep bringing in new buyers here? Falcon 1, why not put your orders in front of big orders? Because there's an entire industry that exists that do something called spoofing. So what they do is they put fake big orders in the order book because traders do that, because that is what a lot of traders do. They think, oh, I can outsmart the big money by front running them. So they, for example, we can probably find one here. This is a great example right here. So they put all this volume in the order books, okay? See all this like bright orange volume? So they put all that volume in the order books to get you to think, ooh, I'm going to front run them. I'm going to go long right here. I'm going to get in a little bit before they do because I can see all that support. So the market comes down, it fills your order, you and all the other people that tried to front run that volume. It fills them, and then when it comes down to actually test that volume, poof, it disappears. And then they come down, oh, look, but there's another big node of volume down here. And then that one instantly, look at that. The second it came to, let me zoom in more so you can really see this. The second that it came to test it, they disappeared it. Ugh. Okay? That's the game they play. is that they put their big volume in there, which is totally fake, just to get the market to go where they want it to go. You start to pile in orders there, and then the market goes to fill your orders. And then as soon as the market gets there, poof, it disappears it, and it goes the opposite end. And they do it all day. I mean, we don't have enough time yet today to show it, but you can see it as a pattern. It's what happens all day, every day. They put in volume, they disappear it. They put it in, they disappear it. So you can see here, they were putting in volume above, okay, to try to pull the price up. Price was moving down. They were bringing in volume. It continued to move down. They started to bring in even more volume, brought in all this volume here. But then as soon as the market started to move up towards it, what happened? It disappeared, right? Where'd all that volume go? I thought all these big players wanted to do business. But then, oh, look where volume started to show up down here. So they pulled the market down to here, pushed it up, then pulled it down to here. Then boof, they start to bring back volume again to pull it back up, so on and so forth. They just keep playing this game all day of essentially trying to trick short-term traders into front-running them, and instead they then do the opposite and wipe you out. That is one of the reasons why Bookmap was truly a giant eye-opener for me. So much of what I thought was just like people being idiots. Like I used to always refer to like weak references and stuff like that. Like, oh, these are all short-term traders who don't know what they're doing and blah, blah, blah. And now I realize, oh no, that's not the case. It's all algorithms that are just fucking with people. Like every single time you see a weak reference, it's just that an algorithm put fake volume there to bring the market. Then it reversed right when it got there. It's like, oh man, it's all just games being played. So here we can watch this game play again. You know, we got all this volume up here. What happens when we actually get up there? Does it disappear? MW, not a good example. Yeah, it was. If they actually fill the volume, you'll see the big volume dots. So if the market gets to one of those volume levels or doesn't quite get to it and then the volume disappears, that's spoofing. Right. And the example that I used, the heat map didn't stay the same. It changed. It went white or black, I mean. $6 million, I would not be stopped out if my trade idea has not been invalidated. John Lash says, typically around here, we don't trade based on our potential losses. We only get out of a trade if the momentum has failed or the trade itself has failed. Yeah. So I don't know that I agree with that first part. Of course, we're always trading around our potential losses. That's risk management. But the idea is that loss was already accepted ahead of time. Right? If you go back and you watch the first 5 minutes of my live stream, before the market even opened this morning, I said that I was bullish for a gap and go as long as we were above this node. So any trade I'm going to enter, okay, from that point on, I'm going to stay in unless this node breaks. If that is the market generated information that I'm looking for, to get me out of the trade, I will not get out until that market generated information tells me to. And this is such a beautiful example because right now this doesn't feel like a gap and go. It doesn't feel bullish, but I'm long and I won't get out of my long, even though I feel like I'm wrong. I feel like the market's going to turn around and go down. I'm not going to get out of my long until the market generated information tells me to. Because what experience has taught me is that once I'm in a trade and I have real money at risk, my emotions start to cloud my ability to recognize the market generated information, right? I start to convince myself I'm wrong once I'm in the trade and I actually have capital at risk. So I must have pre-decided ahead of time where I'm going to get out, and I must be disciplined and stay for that. And as long as I always do that, as long as before I enter a trade, I measure my risk to my reward, I choose my account size so that I'm limiting, my potential losses to less than 2% of my account. Once I make those decisions, That's it. If I get in the trade, I'm in it. I already decided what the trade would be before I got in. And now I just wait and see. I have just found personally that is a much better way over time to trade than when you enter a trade and it starts to feel wrong. You try to get out to like limit your losses a little bit. Like, ooh, let me just get out manually here instead of getting stopped out here because it'll save me, $200 or whatever. It's like, no, you're over the long run. You're better off letting yourself lose that $200 because the potential for the win is much higher. So if I get in a trade, there is nothing that gets me out of that trade other than whatever I decided ahead of time would get me out of it. John Last wasn't sure about the wording on that first part. Yeah. We got there together. Fed speaking? What? Thomas Shelby, do you ever adjust your plans mid-trade to increase the risk? Only if I can move my stop. So like, let's say, for example, I get into a long trade. The market starts to push higher and we start one time framing. And so then I know, okay, I can put my stop below the low of the previous TPO. So then I move my stop from here to here. Then I can look for a new entry. I can only add to the trade if I take the risk off. So that at any moment I'm in a trade, I cannot possibly lose more than 2% of my account, no matter what. But in a perfect world, on a perfect day, sure, it's nice to keep adding to a trend trade. Keep buying every dip. But you have to be able to adjust your risk accordingly. And by the way, I don't do this like with a calculator exactly. It's just a general idea in my mind. I don't want you guys to think you have to sit there and like do the math of every trade. You get the general idea. You know how much you're risking. You know how many points compared to how many contracts and how much money you'll lose. All right, so as we print the C period here, I will admit this is not ideal for the bulls, as a gap and go is about momentum. It's about excitement. It's about FOMO. People wake up in the morning, they see the market is higher, and they feel like they got to get in. Oh no, I missed my chance. So if we keep grinding like this on here, it means we're probably looking at some kind of a rotational day. The market will likely poke down and then find support, get cessation, and just kind of grind around somewhere in here. Just because we don't have that excitement. We don't have that FOMO type of energy. But as always, I would say if you want to keep it really simple, you could wait for a break of the initial balance. If they're able to push the market back above that A period high, then it definitely was a look below and fail, and you can look for much more continuation higher from there. And if they break the C period below the B period low, you can look for a trend, but I just wouldn't fall in love with it. As I have a feeling that this grindy, the way we found support here means there are buyers waiting, just not very many. So that makes for a rotational day. So I remain bullish, but not with a lot of enthusiasm. It's feeling a bit iffy at this point, but I'm okay with that. And with that, I bid you all farewell. Why does it not show the volume on the B? Because we're in the C period now. So the volume profile that you see in the center of the range, that's just the current 30-minute TPO. So as soon as we printed the C, all the volume for the B period disappeared. It's now just in the cumulative for the day. All right, guys, thank you so much. And we'll see you Monday. Oh, also, it's worth noting I'm probably only going to stream on Monday and Tuesday of next week. I haven't made a decision yet, but probably. So anyway, see you Monday. Thank you very much. Members of the brigade, raise the anchor and drop the sails. It's time to go make some money.